Today, we are going to cover a unique charitable funding program with a simple, straightforward approach. If you are a charitable organization that is looking for a viable, long-term gifting program that will provide needed funds today, or if you are an individual who would like to give more to a charity without any cost to you or your heirs, these next few minutes will be time well spent. Today, charitable organizations are experiencing reductions in their contributions. As the economy recession deepens, this trend will undoubtedly continue. We utilize a series of unique financial tools and strategies that are designed to create large charitable gifts. Charitable gifts that without the use of these financial tools and strategies might otherwise not be available to you or your charitable organization. Let's look at how a typical donor would benefit from these simple, straightforward programs, as well as how this win-win program benefits the charitable organization as well. This is done without cost to the charity or the donor. Brian and Joan are retired. They live on a small pension, Social Security income, and depend on interest income from their retirement savings. Brian and Joan, fairly conservative investors. They have a majority of their retirement savings in bank CDs and preferred corporate AAA rated bonds. And like most retired people, they are very concerned that they could outlive their retirement savings. Brian is 72 and is healthy, and his life expectancy is 160 months. Joan, also very healthy and with a life expectancy of 204 months. They have 2 adult children and 3 grandchildren. They would like to give more to your charity, but they do not want to do this if it's going to take away from their current income needs, affecting their lifestyle, or if it is in any way would reduce the inheritance they want to leave to their loved ones. Now, before we get into the details of the program, let's first look at what is typically used to provide retirement income: stocks, bonds, mutual funds, and bank CDs. The stock market has certainly been a traditional way to provide a retirement income, as you know. The stock market can provide some positive gains, but it can be very volatile. And many times an average investor experiences losses rather than gains. And if you have ever owned stock in a down market, your broker is telling you, hang on, the market's going to come back. What about a CD, certificate of deposit or money market? The upside with a CD, with all the talk of bank insolvency, it is good to know that deposits are FDIC insured at a cost of low returns, which greatly reduces the amount of retirement income that they can produce. So if the stock market is risky and the banks are not the best way to protect and pass your retirement savings to your heirs, then what is the solution? What if there was a way your donor could have a guaranteed lifetime income that they could never outlive, be able to pass 100% of their retirement savings to their heirs tax-free, yet at the same time provide a charitable gift both while they are living as well as at their death to your charitable organization without any loss to them or their heirs? Let's look at strategy number 1, how it works to provide a charitable gift. It combines 2 products to produce a powerful, guaranteed retirement income plan for your donor, plus passes 100% of your principal income tax-free to their heirs at death. At the same time, provides an immediate contribution to your charity, as well as create a charitable legacy upon the death of your donor. Part of Brian and Joan's total assets, approximately $500,000, is a combination of bank CDs and bonds. Currently, they earn about 3.2% from these investments, or $16,000 annually. Please note that this concept will work with as little as $25,000 and as much as $25 million. They want to leave $500,000 to their family, so they take only the interest income, leaving the principal in place. Now consider this. Brian takes $500,000 and purchases a single premium immediate annuity, or a SPIA, with a life-only option. A SPIA is an annuity that pays a life income regardless of how long you live. The advantage of the life-only option is it provides the highest payout possible. The disadvantage is that once the annuitant dies, the income stops. Now consider this. Brian takes the $500,000 and purchases a single premium immediate annuity with a life-only option. A SPIA is an annuity that pays a life income regardless of how long you live. The advantage of the life-only option is it provides the highest possible payout. The disadvantage is that once the annuitant dies, the income stops. A SPIA is an annuity that pays a life income regardless of how long you live. The advantage of the life-only option is it provides the highest payout possible. The disadvantage is that once the annuitant dies, the income stops. Based on the age of 72, a $500,000 SPIA with a life-only income could provide a total income of almost $48,000. With a SPIA, part of this income is considered a return of premium, so even though Brian and Joan are in a 32% tax bracket, over 89% of the income, or over $43,000, is true spendable income. Therefore, by repositioning the bank CD and bonds into a single premium immediate annuity, Brian and Joan after-tax spendable income is increased by over $32,000. But stop! Tripling the after-tax income is attractive, but what happens when Brian dies? What does a life-only payout from the SPIA annuity mean? It means that upon the death of the annuitant, the income stops, and the annuity value is retained by the insurance company. So what is the solution to income stopping at Brian's death, leaving Joan with no income? Brian's heirs will be left with nothing. And how does a charity benefit from this program? So what's the solution to the income stopping at Brian's death? Brian's heirs will be left with nothing, and how does the charity benefit from this program? The solution is a portion of the additional income is used to buy a permanent life insurance policy. Your original principal is absolutely guaranteed to be paid to your heirs. Part 2 uses a life insurance policy which goes income tax free to your heirs or your beneficiaries. So part of the gross income from the SPIA is used to pay the premiums on a permanent life insurance policy, and this is not a term policy that runs out or the premiums skyrocket in the future. Let's see how the two work together. A $500,000 permanent life insurance policy at age 72 that is guaranteed for life will run around $17,000 to $20,000 per year, depending on the health rating class that is approved by the various insurance companies that are available for this type of program. We will split the difference for the purpose of this illustration and use $18,500 per year. This leaves a total of $13,864 as an immediate charitable contribution to your heirs per year. So by repositioning the $500,000 in our program, Brian and Joan were able to increase their spendable income, and since a gift potentially created an additional tax deduction, the spendable after-tax income went from $10,800 to $15,236, and the $500,000 passes to their heirs, income tax-free. This is regardless whether it is an IRA, 401k, or non-qualified account. At the same time, provided an annual gift of $13,864 to your charity each year, year in and year out. Keep in mind that an important added benefit to the donor's heirs is with an IRA 401k account, funds are passed as ordinary income, which could reduce the funds by as much as 70%, which means that on a $500,000 IRA account, the heirs could be left with only $150,000 rather than the full $500,000 that they will receive with our plan. We cannot emphasize this important point that our program, the total amount passes tax-free to the donor's heirs. So, this strategy is simple. It provides a donor a guarantee income that they can never outlive. It passes 100% of the asset to their heirs tax-free. At the same time, provides an immediate gift to your charity each year, and under current tax code, gives the donor a tax deduction. This is a simple plan with no administration costs, easy to implement and maintain. So, whether you are a charitable organization or you are a donor interested in implementing a plan for yourself, all you need to do is call us and we will help you set up